I want to go over the best assets to buy now. Welcome to the Nick Rutherford Report, and I want to share how I uncover the best assets to buy, what I look for, and what tells me that an asset is really not worth buying. So let's get right into it. So to determine what a good asset is, the very first thing I need to do is to determine what will get me ahead and what causes me to fall behind. So I look at the money supply. The money supply is how fast the government is making new money, because if I've got $100 in my pocket now and they make some more money, well, there's a lot more money in the world, so my $100 is worth less. And this happens slowly over time and erodes my purchasing power. So I really want to look at what are the assets that are staying above the creation of money, because it's not what you would think, and this is what causes investors to slowly lose or just not get to their goal. So I put these numbers in here. I've looked around the 2000s, and back in January of 2000, the money supply was around 47, maybe that's billions of dollars. So it was around 4700, and here it is now up to 21,400. And if I put that into this investment calculator over the last 25 years, we're starting at 4,700, we're up to 21.4. And I put that in there and I calculate it. You can see that the average annual return rate is just over 6. Now, we don't need to be exact here. I'm just going for a rough estimate so I can determine what assets far outperform the benchmark that I'm going for and what underperform. This way I know if I'm getting ahead or I'm falling behind. So I've researched this and I pulled up the median sales price of homes. Well, they're up just over 6% year on year. And this is according to Redfin. They aggregate a lot of the home data. So I can see just from looking at this, if the money supply on average expands around 6%, and over the last 1 year, the price of homes on average is up about 6%, I can safely say I'm neither falling behind, but I'm also not getting ahead. So this is just not an asset that on average I want to look at. Of course, there are going to be exceptions to the average, but we're just going for average here, just to give us a baseline or what are good assets, what are great assets, and what are not so good assets. Now, another asset that I want to look at is just cash in short-term bonds. I'm lumping this all together because if you're lending someone money for a year, it's practically as good as cash. When the interest rates change, it's not going to hurt you that much. Now, if I look at this, I'm going to use this iShares 0 to 5 year investment grade corporate bond as a proxy for some cash, some CDs, some short-term bonds, because a lot of investors invest in these things because they think they're safe and they're very liquid. Now, over the last 1 year, it's up about 1%. And everyone knows the interest rates have been as high as 5 and maybe as low as 3 point something. Let's just use 4 just as a roundabout estimate. So over the last 1 year, maybe you got a coupon of 4%. And your bonds are up 1% here. So just on average, you made around a 5% return in the last year. But on average, the money supply goes up 6% every year. So in fact, if you're an investor investing in this asset, you've just fallen behind by 1%. And 1% might not seem like a lot, but over years and decades, this is what prevents investors from getting to their goals. Now, the next asset I want to look at is the longer bond. So we're just going to look at the iShares 20-year plus Treasury bond because, well, government bonds are the safest bonds. And here we have, over the last 1 year, it's down about 11%. Now, of course, you've been clipping your 4-ish% coupon, so maybe that 11% is what? -7? Well, tack on a 6% in the money supply growth, just on average. Well, maybe you're behind 7 plus 6, 13%. To me, that is an asset where I'm falling behind. I'm not getting ahead. Now, the next asset I want to look at is stocks. going to use stocks as a proxy for businesses. And over the last 1 year, the best businesses in the world in the S&P 500 are up 24%. So if the money supply was growing on average 6%, well, now I'm up over 18% relative to the benchmark of where I want to be so that I can get ahead instead of falling behind. And I know not every year is this year, and that was an exceptional year. We're going to get into the long-term averages in just a second. Now let's look at Bitcoin. Bitcoin obviously has been a fantastic asset. And over the last 1 year, it's up 104% right now. So it's beating any sort of inflation by a large margin. Now, one other asset I want to highlight here is gold. And I know this is kind of obvious, but let's look at gold over the last 1 year. Over the last 5 years, it's up 70%. And over the last 1 year, it's up 32%. So if I look at things on a broad asset class, this is actually the second best performing asset out there right now. Now, I want to zoom in to this. And this is a report from a wealthofcommonsense.com. And they've done a study here, and they've looked at the long-term performance of stocks, bonds, cash, real estate, gold from 1928 to 2023. And you can see from their data that on average, businesses, stocks, they're up almost 10% a year. Bonds, 4.6. Cash, 3.3. Real estate, 4.2. Gold, just about 5. 4.9 to be exact. Now, if the money supply is expanding anywhere around 6% a year, I think some people have quoted the average around 7, but let's just say it's in that area. Historically, there's really only businesses are outperforming it. Bitcoin is a little new. Maybe it will continue outperforming it. Maybe it won't. We'll have to see. Recently, it's very obvious from what we just looked at, there are 3 asset classes outperforming. So this is some really important data for you to understand. When you understand this, you really are becoming a super investor because you understand something that most investors don't. And when you're buying these assets that are expanding faster than the money supply is expanding, you're getting closer and closer to your goals. You're going to achieve that security, that freedom, that legacy that you want through your investments. While other investors, they fall behind because they don't understand that the thing they bought is not expanding faster than the rate of money expanding. And then they lose money slowly over time. And before they know it, they've lost a bunch of money. They're not staying ahead. So when you understand this, you have a leg up. But I think there's an important lesson that I want to put in here. And that is that we have these 3 assets. We've got gold, we've got Bitcoin, and we've got businesses. Well, I've learned an important lesson from the billionaire investor Ray Dalio. And he says that diversification is the holy grail of investing. Because we can study the past to predict the future. But the problem is things don't always turn out the way you want. So this means I'm going to want to have some gold, some Bitcoin, and some businesses. But not all businesses are created the same. See, there's a lesson I learned from the famous speculator Rick Rule. He says small businesses have risk, big businesses have risk, yet small businesses have the potential for small profit, and big businesses have the potential for big profit. So I want as many big businesses that are great as I can get. And I look for big businesses that have the 3 Gs. A good business, good growth, and can I get it at a good price? This is what I look for. And that completes my diversified portfolio to take me to where I want to be. And if you want to know the number 1 stock to buy right now, you can check in my description and go to my website, rutherfordwealthreport.com. I'll share it with you completely for free when you get on my newsletter. Now, I hope this was interesting. It gives you a benchmark to say, I got to get ahead of this benchmark, otherwise I'm falling behind. And when you're armed with this information, it will help you make better financial decisions for your future. So hit that like button, subscribe to this channel, share this with someone who would get a lot out of it. I hope that helps. I'll see you next time. How am I using this information to protect and grow my wealth? Go to highreturnlowrisk.com.